What an amazing day for the market today. I personally had three stocks in the game plan: NVIDIA for downside, SMCI for downside, and Tesla for upside. All three stocks did what I expected them to do. So we had a really good start to the quarter, start of the second half of 2024, start of a new month, start of a new week. It's like everything is a fresh start on a Monday, which is really good. But I personally had a red start to the day. I started out red on my first trade. I actually made a hotkey mistake as well, but I was able to end the day with being nicely green. And that is the benefit of risk management, which I will be discussing in this video. Let's first start with the game plan of the day. I was personally watching, I'm just going to zoom in right here. So I was watching NVDA 123 to 122.5 rejection for downside, push to 120. This worked out exactly the way I wanted it to work out. Then SMCI 830 to 820 rejection, 830 to 810 rejection zone. This is a typo on my end for downside breakdown of 800, potentially higher 700s on the cards if it gets the volume. Tesla, not a main watch until it holds about 205. Pretty bad price action on Friday too, so just not a good daily mover. Gotta go based on the intraday momentum on this one, but Tesla had a really good push towards the upside. SMCI sold off nicely, NVIDIA also sold off nicely. So all three trades worked out perfectly. Let's actually start with SMCI and why I was watching this stock. And honestly, this was the best game plan of the day because the premiums moved approximately 300% on this trade. It was a playbook setup. Let's start with the monthly chart, which is a very higher time frame because we closed the monthly bar last week on Friday. That was the end of June. So we had two dojis month in a row with the upper wick bigger than the lower wick. So looks like maybe it's consolidating. We might see a push towards the downside. So monthly chart is looking a bit bearish to me. Looks like it has found a top, but we never know. Like monthly chart in the next few months, it might even go for all-time high. On the weekly chart, it's very interesting. So on the weekly chart, if I remove these levels, we can see that we were making a trend. We broke out of this trend towards the upside, faked out, had a red week on high volume. So that is very interesting. So I'm looking for a downside move if we make a new weekly low. So last week's low was 808.27. So this is very important level, which I have marked on my chart, 808.27. And the monthly low is 741.22, which you guys can see it's marked in yellow for me. Then on the daily chart, we can see that really good engulfing bar on the daily chart. So we had a push towards the upside on Thursday last week, but on Friday, we gave it all back with high volume. This is called a bearish engulfing candle. That's why this is an A+ setup. The next day, I was watching for a rejection of 830. We can see a few low of the days, a close of the days, open of the days around 830. To 810 zone for a push towards 800 for a breakdown under 800. And we might even see higher 700s, which I mentioned. And you guys can see we went all the way to 773, which is approximately the low of the day. I was watching this stock. I was already in NVDA, but this was a good entry on this stock right here. We had a push down. The 5 minutes bar closed bearish right here. This was a pullback to the prior day close around 820. If you entered right here, 780 puts, same week expiry, they went from $10 all the way to around $27, $28, which is approximately 300% winner on your position. So I missed out on this trade. I was watching this stock, but it's hard to manage two positions, especially like if I'm in NVDA already. SMCI is a riskier stock. The spreads are a bit wider than NVDA. So I just decided to focus on the trade in which I already am, which was NVDA. Now talking about NVDA and why I was watching this stock. So NVDA was the main stock I was focusing on last week as well on Friday, because looks like we had 3 red days in a row with high volume, green candles on low volume. And since then, we have been consolidating in between 122 to around 128 zone for about 3 days. We can see 3 dojis in a row. Today, the pre-market low was around 120. We were pretty bearish in the pre-market, but heading into the open, we actually pushed towards the upside. So we opened right here, which is approximately 123. So I was looking for a breakdown under this zone. If I zoom in right here, so I was looking for a breakdown under 123 to 122.5 zone, coming back to the game plan. 123 to 122.5 zone for downside, which is what I mentioned and where I entered. I'm going to show you guys my entries and exits and caught this push towards the downside for a breakdown under 120. And after 120, looks like we might even push towards the upside now. And that is the importance of sticking to your game plan. Yes, it could have flushed under 118, but I took my partials along the way because if it's a winning trade, you can't be 100% sure in the market. So if you take your partials along the way, and depending on your confidence in the trade, you can lower the number of partials, the percentage of partials you take along the way. Like if it's a quick scalp, I'm going to take like 50% out. But if I expect the trade to work out nicely, I'm going to take like 50% out and then maybe 5%, 10%, something like that. So you can be slow with your partials, but I always recommend to take partials along the way once it hits your 3-hour, 2-hour trade, 3-hour trade, 4-hour trade. That means 4 times your risk. Let's take a look at the pre-market action of this stock. So we can see that I was looking for a breakdown under 123, 122.5 for 120. It actually happened in the pre-market, and glad that it pushed towards the upside. So I was actually looking for a breakdown under 123 and we opened right near 123.5. So off the open, I took my first trade right here. So my first trade was at 9:30 a.m. when I saw that we are dipping under 123. I entered 60 contracts. I'm going to show you guys my fill. And then I covered for a loss. So I actually made a hotkey mistake because when I enter a trade off the open, I always place a manual safety order, market order. Like if it goes against me, I want to exit at the market, because sometimes you might not exit your position. You might not get filled on your position off the open because the premiums are very volatile. Then I entered my position again, and this is the trade. I did one mistake because I was down $1,000 on the first trade, approximately 900. It should have been a $600 loss, but because I made a hotkey mistake, I lost 900. I entered my second position right here. I took the 50% out very quickly. So I took 50% out just to get green for the day, which is my bad. I wanted to start the month on a green note. But again, every trade is a new trade. I took 50% out, but the remaining 50%, I was very patient with my exits. I took partials right here. I took partials right here. I took partials right here. My last partial was right here and then right here. So the last two partials paid, the premiums moved nicely, approximately 60 to 70% in my favor. Now let's take a look at my entries and exits. My first position, I entered 60 contracts. I entered 120 puts, same week expiry contracts. 1.45, but I wanted to exit all my contracts, 60 contracts at 1.35, but I was not able to get filled. And then I exited 30 instead of 60 because I was not able to change the manual order. But overall, at the end, I lost approximately $800 to $900 on the first trade itself. It should have been a $600 loss, but I messed up on the executions. On the second trade, when I saw a breakdown back under 123, I'm going to show you guys the book map as well. On the book map, we can see that this was the 9:30 a.m. candle. We had a doji right here. We tried to push towards the upside, and then we had this big seller right here, which is approximately 41,000 shares we can see right here. So we had a big seller at 124-ish, but then, which was approximately 47,000 shares. And then we had another big seller around 41,000 shares appear all of a sudden. So this was actually a really good entry. I was not able to focus on the book map right off the open. I exited my position, but then I saw that, okay, the seller has appeared again. There's a big seller right here, and we are not seeing a lot of buy orders. We are not seeing a lot of buying at the ask price. The green dots are really small right here. So this was actually a really good entry, which I missed. But then when I saw the breakdown back under 123, we can see that we had the big red dots, barely any green right here. So not a lot of people are buying at the ask price, but a lot of stop losses, or people are shorting their stock, or people are exiting their position. You never know. But we can see a lot of red on the tape. So people are hitting the bid price aggressively. So I entered my position. Second position, right around here, I entered 30 contracts. Then I added 30 more contracts to my position. You guys can see overall 60 contracts, and my fill price was 1.49 average. This is the mistake I made. I took the first 50 contracts out at 1.78, which is approximately, I made like $900. You guys can feel my emotions right here, because on the first trade, I was down 900. So as soon as I was up 900, I was like, okay, let's lock in 50% of position just to get to green for the day, break even for the day. And then I did a pretty good job managing the rest of the position. I took 20 also a bit too aggressively out, honestly. But we had this big green bar again. Like if you catch a move from 1.5 to approximately $2, which is 25-30% move right off the open, and especially on a Monday, because on Monday the premiums move slowly compared to a Wednesday, Thursday or Friday. I think I did a pretty good job. Then the remaining 15 contracts, I just held them like a boss. I was like, even if these contracts go to break even, I don't care about it, because it worked out nicely. For the remaining 15 contracts out of the 60 contracts, I held to my profit target. So my profit target was 120. You guys can see just before 120, I took 5 contracts out. Another 5 contracts around 119, 118. We had this doji on high volume, which can be called exhaustion volume as well. And then once we broke back up above 120, I covered the remaining 5 contracts at 2.31. Overall, I made approximately $3,000 on my second trade, and I lost $900 on the first trade. And that is the benefit of risk management. Yes, I could have held my first position as well, but you never know, because the stock market is so volatile off the open. Because you guys can see it dropped from 123.6 to approximately 122.2, which is a 1.4 points move in one candle. the same thing could have gone against me as well. It could have moved from 123.6 to maybe 125, like who knows, right? That's why if it reaches your stop loss, when I saw this doji, I was like, okay, exit the position. But once it broke down, I entered again. And that is the beauty of risk management, because if you exit your trade at the right time, you will always have next opportunity to enter your position if it starts working out in your favor. Let's now take a look at my P&L. On the first position, I lost $900 approximately. On the second position, I made approximately $2,800 to $3,000. Overall, ending the day with $1,925 in the green, which is good enough. Like usually at the start of the month, I keep my position sizing around $5,000 to $7,000. On these two trades, my position sizing was around $9,000 to $10,000 because it was an A+ setup. So I don't blame myself for increasing my position sizing right off the open, especially because I had a good end to the last month as well. So I had the confidence from the last month as well. So I think I did a pretty good job. $2,000. Again, don't focus on the numbers, because for some people, honestly, like if I post this in the Discord group as well, if I have a chat with other people, for some people it's a lot of money. For other people it's nothing, honestly, because you could have made like $20,000 on the same trade, maybe taking 600 contracts. So that's why it's just a number at the end of the day. You focus on risk to reward. First trade, risk was 700. I lost 900. Second trade, the risk was again 700, and I made $3,500, approximately $3,000. So that was approximately 4 to 4.5 hour trade on the second trade, and the first trade I lost approximately 1.3 hour. So yeah, that's it guys. Hopefully you like these kind of short recaps. If you do, let me know in the comment section below, because I'm planning to do more of these recaps. I will most likely have a red day soon, so I'm going to make a recap about that as well. But yeah, let me know in the comment section below if you guys like these kind of videos. If you guys are new, subscribe to my channel. If you guys don't follow me on Instagram, the link will be in the description box below. I've been posting a lot of good behind the scenes of a trader on my Instagram as well. Thank you for watching, and I will see you guys in the next video.